Growing inventory and stable prices could lead to opportunities for buyers in the Fraser Valley market this winter, despite uncertain economic conditions. Hi, Jordan here with your Fraser Valley market update for February of 2025. Newly listed homes jumped 167% from December to January, with 3,432 listed on the Fraser Valley Real Estate Board's MLS service. At 7,251 active listings, inventory is at a 10-year seasonal high, 54% above the 10-year average. While sales remained slow in January with 818 properties sold, which is down 18% from December, the combination of stable prices and abundant selection presents potential opportunities for buyers to get back into the market. The sales to active listing ratio appears to bear this out. At 11%, the overall ratio is signaling a buyer's market, with detached homes firmly in buyer's market territory. The market is considered balanced by the board when the ratio is between 12 and 20%. As always, every market is different, and some are moving much faster than others. Surrey detached are deep in buyer's market territory with a sell-through rate of only 8%, while Maple Ridge townhomes are moving far faster. They're in a strong seller's market with a sell-through rate of 29% and prices climbing 2.2% over the last 4 months, while most every other market has had flat or declining prices. If you're planning to buy or sell, it's important to evaluate the market you're in individually in order to make the most informed decisions. You can dig deeper into these numbers broken out by city and property type on the market areas page of jkre.ca. Benchmark prices in the Fraser Valley have held relatively steady in January, with the composite benchmark price down 0.03% to $964,800. Taking a look at HBI benchmark price activity by housing type, we see that single-family detached rose to $1,482,400, which is up 0.1% compared to December of 2024 and up 0.6% compared to January of last year. Detached were 9 days slower to sell in January versus December, with an average of 52 days to sell. Townhomes fell to 826,000, which is down 0.2% compared to December and also down 0.2% compared to January of 2024. They were 2 days slower to sell than in December, with an average of 38 days on market. Apartments rose to 534,600, up 0.1% compared to December and down 1.2% compared to January of last year. They were 4 days slower to sell in January than December, with an average of 42 days to sell. As expected, we saw another quarter-point drop in the Bank of Canada's policy interest rate, bringing it down to 3% flat. This is the 6th decrease in a row. Fixed and variable rates are now neck and neck, sitting at around 4 to 4.5%. It'll be interesting to see what products buyers and renewing mortgage holders choose to take going forwards. 5-year bond yields are currently sitting at about 2.6%, having fallen from a high of 3.28 less than 30 days ago, as investors seek safer bets in the light of proposed US tariffs. I could see this same economic uncertainty causing the Bank of Canada to drop its overnight rate, thereby reducing variable rate products. All in all, this is good news for beleaguered Canadian borrowers and those looking to enter the market, so long as we ignore the economic meteor hurling toward us in the form of tariffs, global uncertainty, and whatever fresh crisis the market has in store. But hey, at least mortgage rates are coming down. It seems the increase in market activity we saw in January was largely due to rollover demand from the Christmas season. I had to deal with a few competing bids early on in January, but that quickly fell off. We're back in the same holding pattern market movement where everyone is waiting to see what happens. Failed listings increased significantly in nearly all markets and property types as sellers reset for the new year. A portion of the wave of new listings will be sellers taking another kick at the can after failing to sell last year, but in general, reducing rates will be a strong buying signal, as more purchasing power usually leads to higher prices as buyers can stretch that budget just a little bit further. We'll have to wait and see if this plays out though, as buyers are still feeling that financial squeeze. While rates are trending downwards, the rising cost of living and incoming tariffs are eating into affordability, making it harder for many to take advantage of that increased buying power. At the same time, inventory levels have hit a 10-year high, which would typically suggest a more balanced or even buyer-favored market, but not all listings are created equal. Well-priced homes are still moving quickly. The reported average days on market is just that. It's an average. Some homes are selling much faster, while others that weren't priced correctly from the start are dragging that number higher. Bottom line, pricing matters more than ever, and if you're buying, it still pays to be ready to move when that right deal pops up. In other news, the CRA graciously decided to delay the capital gains tax increase and have deferred that to January 1st, 2026. I guess we're all just going to ignore the fact that the legislation effectively died when Parliament was prorogued last month, meaning the tax increase received neither parliamentary approval nor royal assent, and the CRA implementing such a change would legally be unfounded and beyond their mandate. But that's just my opinion, and I'd love to hear yours. Did the CRA have the legal authority to increase taxes? Will higher capital gains drive investment out of Canada? Do you think the tariff threats will lead to lower rates, spurring on sales, or will economic uncertainty keep buyers on the sidelines? Drop a comment, send me a message. I'd love to hear your take. And if you have any questions about buying, selling, or investing in Fraser Valley real estate, let's chat. I'm always happy to help. Thanks.